Hello, welcome into today's video. I'm going to be going into why Warren Buffett doesn't like gold and silver and why he's almost never invested in it. And essentially the reason is it's a non-productive asset. So what does non-productive mean? Essentially what it means is that gold, if you own it now and if you own it 1,000 years from now, you'll be dead. But no, that's not the point. I mean, if you own it now and you own it 10 years from now, that gold would have created nothing. In fact, it would have costed you. Whether you hold it through an ETF, they'll charge you 1 or 2% a year, or whether you hold it just by simply storing it, you'll need a locker or whatever. It'll cost you. It's not productive. Whereas if you owned a business, that business during the duration of you owning it will pay you. You'll receive profits from the business operations through the likes of dividends, or whether that just simply be the balance sheet improves over time and you're compensated that way. So realistically, if the business were to ever sell, that business would be more valuable and it's a productive asset that you get compensated for. Property to an extent fits in this category as well, because technically you're as an owner of the business, as the owner of the property, you'd be renting it out. So net of everything, you should be positive cash flowing over time. And that's what it means to have a productive asset. Hence, gold isn't productive. That's the reason why Warren Buffett and Charlie Munger are not keen on non-productive assets, which are the likes of gold, silver, Bitcoin, just because they're not producing anything. So there's no real value to them as such. So they're not backed by anything. Only what the bigger fool thinks it's worth. So essentially the only reason that gold has its value to the extent it does is because of the value of what people think of gold. That's the reason behind it. Now, yes, you could argue that to an extent it's used in materials and so forth, whether that be sort of graphics cards or computers and so forth. I mean, they have graphics cards, but you know what I mean. Yes, that's true to an extent, but that doesn't justify all of gold's valuation, and even then it's still not productive. It just means that to an extent it's backed by something, and that's legitimate demand. But again, that's not the reason why gold is worth as much as it is. Now, if you were to tell me copper, on the other hand, copper, yes, it's not productive, of course, but at least it's backed by something. It's backed by the demand of electrification, previously plumbing, AI uses a lot of copper, AI facilities, of course. So that's essentially the reason behind it. This doesn't just apply to the likes of gold, but just anything in general that's non-productive, and it's part of the reason why historically the best performing assets over hundreds of years have been equities. Thank you for listening.